We're into 2025, and as we get going, we're seeing a minor round of profit taking on long dollar positions. But the price action is to be taken with a grain of salt in what is still super thin holiday trade. Ultimately, the US dollar remains in the driver's seat after putting in its strongest annual performance in years, with monetary policy divergence expected to continue to keep the buck supported. At the moment, the market and Fed are pretty much aligned, with both expecting 2 rate cuts this year. This is in sharp contrast from what had been expectations for 4 cuts ahead of the Fed December meeting. Meanwhile, the other major central banks have been leaning more accommodative. In her most recent remarks in this new year, ECB President Lagarde hinted at the ECB's intent to continue cutting rates in 2025. The Australian and New Zealand dollars are definitely welcoming this wave of dollar selling on Thursday after the two currencies sunk to fresh multi-month lows. Interestingly enough, the recovery comes despite softer manufacturing data out of Australia and softer China manufacturing reads. Of course, another big theme in 2025 will be the new U.S. administration and just how far it goes to delivering on policies President Trump had promised during the campaign. Just to review, the U.S. dollar ended 2024 up double digits against the New Zealand dollar and yen, while closing up just under 10% against the Australian dollar and 6% against the euro. We would, however, warn against expectations for 2025 to be a year of intense dollar strength. Indeed, the monetary policy story lends itself to dollar demand. At the same time, with so much of a hawkish shift already priced and with so much built in towards expectations for Trump policies that could end up letting down these expectations, this could set up a reversal of flow, with the balance of risk leaning out of the dollar's favor. Technically speaking, we've also arrived at longer-term levels that would support the idea for some form of a dollar top. Key standouts on Thursday's calendar come from German, Eurozone, and UK manufacturing data, US initial jobless claims, and US construction spending. That's all for now.